we also want to make sure that we are walking in affirmations. I am a master trader. I am the signal. All my trades in and profit. I am 777. Okay, now you can add to it one of the affirmations that we added this week, right? One of the affirmations that we added this week is this NFP is my most profitable week trading with the BYOB cash out. So you could, because we want to be clear, we definitely want to understand. We want to make sure we understand what's happening in the market. We want to make sure we have clarity with what's happening in the market, right? We definitely need to understand. And so we just have to make sure we have that clarity and that understanding. And so now, as we, yeah, it is. NFP is my most profitable week. Trading the BYOB cash out. Don't leave out trading the BYOB cash out. So now you can add to those affirmations. You can definitely add to those affirmations, but do not take away. Now, if this is your first time on the call, this is your first time here with us this evening, let me get a 111 in the chat. Let me get a 111 in the chat. Yep, I'm economically unbothered, okay? Economically unbothered. Economically unbothered. Still learning how to cash out. Let me get a 222. Look how he added that. Filled with 777s. Filled with 777s. I love it. Now, here we are today. We're definitely talking about the BYOB cash out. We're taking it back to the basics. So now, my name is Tasha M. Dyer. I'm actually the creator of the BYOB cash out strategy. Now, we are here tonight. We're going to take this back to the basics. So last week, I know we had a question in the chat, you know, there was a question in the chat about the difference. Well, this week, actually, there was a question in the chat about the difference of the vibratas and, you know, it used to be web analyzer. You see that in parentheses. That was on last week. So I'm not going to go over that again tonight. I want to help you, right? Now, I want to help you because of this is NFP week, and I want to help you with understanding the simplicity of the strategy. I want to help you navigate it, right? You've been using the tools, okay? You've been using the tools, and I really, really, really want to help you navigate that. And so that's what we're going to do tonight. That's what we're going to. But we're still here with the basics, okay? So I want to make sure that we emphasize that so you guys understand that in its totality. And you see it pulled up, right? This is the now, you should always be on a vibrato. We should always be using a vibrato. We should always be using a vibrato. Okay? We should be on here. Now, as you can see, I got mine pulled up. We're going to talk about what the BYOB cash out is. And I actually got two trays that I pulled, one that went all the way through and one that actually went all the way through and one that didn't, okay? One that went all the way through and one that did not, because I really want to help you all see, you know, how to navigate it. But first, we're going to talk about what the BYOB cash out is. And you guys got to bear with me a little bit and just bear with me just a little bit. This is not pulling. I wanted to pull. We have a significant storm out here. So you just got to bear with me just a bit. All right, I'm not going to get it. I'm lucky to be on here with the way the Wi-Fi is acting. So I'm going to just count my blessings right now. So what we're going to do is I'm going to talk about the BYOB cash out. We're sitting here with three indicators. Now, with these three indicators, okay, with the three indicators, it is we have the stochastic, we have the Hikinashi candles, and we have the PSAR, okay? I got my stochastic, I got my Hikinashi candles, and I have my PSAR. Now, as we go into this, I'm a back up just for 1 second. as we go into this, I need you to walk into this with the right mindset, okay? Everything that we do, every single thing that we are is mindset. So you even, no matter what the market is doing, no matter where the market is at, no matter how the market is, it's your mindset. That's why we begin this with affirmations, okay? That's why we begin this. So just like this morning, okay, just like this morning, the market itself was sitting at, the market was sitting still. It had no clear direction, okay? The market literally had no clear direction. And we discussed that this morning. Now, that is not a time for you to jump into trades and try to force trades. It's not a time for you to jump into trades and to walk out in frustration. It's not a time for any of that, right? The market had no clear direction this morning, and we discussed that. That's a time for you to make sure you're plugged in. It's a time for you to make sure that you're studying, you're training, you're in the news, right? We don't pull the news up on this call. So that's why I said, let me back up before we talk about the strategy, because we want to make sure that you back up and you check the news. You understand what's happening. You understand what's transpiring. You understand what's going on. This is why you're the signal. This is why we're not doing signals, right? This is why you walk in that affirmation and you walk in that acknowledgement. And this is why we tell you, do not chase the dollars. If you're trading for dollars, okay? If you're trading for dollars, you will not reap the rewards that you're looking for. Yes, we are here because we want the income, okay? Yes, we are here because we want the wealth. But if you chase the dollar, you will not reap the rewards that you're looking for. You have to seek the skill set. When you seek the skill set, I can guarantee you the financial reward will come. You will, at that point, begin, your trade account will grow significantly because you are seeking the skill set. And when you seek the skill set, you will acquire the knowledge needed to grow your trade account. That's what you're here for. Using the skill set, applying it to the tools, compounding, journaling, being disciplined, focused, gathering the right information that you need. So that begins with mindset, walking in those affirmations, walking in a positive. What you speak to yourself, it begins there. So this is BYOB basics, right? So I'm giving you the foundation. I'm giving you the truth. I'm giving you where it begins, okay? I don't know if you're going to get that in you. I'm telling you, that is where it begins. You can't just jump in here and start trading. You have to get your mind right, okay? That's where it's going to begin. Now, once I know, I sat down, I cleared my mind, I'm walking in the right energy, I'm walking with the right mindset, I'm walking with all of that. Now that's when you see I share my screen. That's intentional. We're intentional about how we do business. We have to be intentional about what we want to do with trading. We have to be intentional about that. And so now I come looking for the skill set. And that is where we're sitting here with the stochastic. I got my Hikanashi candles and I have my PSAR. 3 simple indicators. Literally, it's 3 simple indicators. It is 3 simple indicators, okay? Let's not overcomplicate it. Let's not make it difficult. The market, we check the news, we understand what's happening, and it's 3 simple indicators, okay? I got my Hikanashi candles and I have my PSAR. These 2 are lagging indicators. My leading indicator is the stochastic. Now, I can trade on any time frame. I can trade longer trades. I can trade short trades. It does not matter. I can be a scalper. I could be intraday. I can be a swing trader. I can trade however my heart desires. But we have many 111s on this call. We have many individuals that like to scout the market, get in and out. What is it that your heart desires, okay? Well, we're on a 15-minute chart, right? We're on a 15-minute chart. This should never feel like you should never have anxiety, right? You should always feel like you know, you understand what you're doing. You should always understand why you took a trade. You should always understand what you're doing, right? And that's what we're here to help you. That's why that affirmation is, I am the signal. That's why that's that affirmation. Now, stochastic. Stochastic. It runs from 0 to 100. It runs from 0 to 100. Right here, I got 20 to 80. Okay, 20 to 80. We actually had the conversation this morning. So I need you to feel this. I need you to understand this. It has to start around the 20. It has to start around the 80. It has to start around the 20. It has to start around the 80. Okay, I need this crossover and cross up. I need this crossover and cross down. I need this crossover and cross up. I need this crossover and cross down. If you're doing anything else, that means you've mastered this. You've mastered this, okay? So for those, you do see individuals, like when I told you all, like, let me come in here. I want to show you something. It's slow. I told you we got a storm. So see if I can get it. Like when I told you, right, to ride this up, or when I told you I knew where gold was going, and I told you I knew it was going to hit 2000, right? When I said that, but even on the 15-minute chart, it still started around. But when it kept going and it kept riding and it kept riding and it kept riding, that's because I've mastered the 15-minute. I've mastered what I'm sharing with you. So if you haven't mastered that, you need to walk with us on those calls, right? If you haven't mastered that, because I know that I can come on another time frame and that was like more of a continuation trade, or there are other factors that allow me to tell you that this trade was going to continue. There are other factors involved. So if you haven't mastered this piece, if you haven't mastered the blue line cross over the red in the upper momentum, the blue line cross over the red around the 80 and a downward momentum, if you haven't mastered this, then don't go trying to do where you see a continuation trade, or you see a trade that's actually still taking place and you're trying to get into a buy where you're above the 80. Do not go trying to do that just yet, because that, I can tell you, is where you're trying to take a trade and then you're wondering what happened. Well, should I be trading indices? Should I be doing gold? Should I be doing metals, right? Should I? And you start second guessing yourself. It's not that. It's because you're trying to do more advanced skill set. It's like, just like when you go to school, right? Don't you start with the foundation, and we start with the basics, and then the teacher starts adding different skill sets and starts layering things on top of that. But where did you start? You started here. Blue line cross over the red and an upward momentum. I got my green candle with a flat bottom and my PSAR flip right here. So I'm right here. We're right here. I got my blue line cross over the red and an upward momentum. I got my green candle right here, stochastic, blue line cross over the red and an upward momentum. Green candle with a flat bottom, PSAR flip to the bottom. That's the BYOB cash out in its simplicity, okay? That's the BYOB cash out in its simplicity, okay? And then I got my blue line cross over red and a downward momentum. I got my red candle with a flat top, and I got my PSAR flip. That's what I mean. So let me get an arrow, and I'm gonna put this here, right? Get an arrow, I'm gonna put that there. And I'm gonna get an arrow, and I'm gonna put this here. So there are levels to this thing. There are levels to how you grow. There are levels to how you trade. There are levels to this. So as the market, as you're learning your skill set, as you're developing this, before we take one trade, let's make sure it flows with time frame confluence. Now, why do we need that, okay? Why do we need time frame confluence? I can look at that and see that meets all the criteria of BYOB cash out, right? Blue line cross over the red and upward momentum, blue line cross over the red and downward momentum, right? So for a buy, blue line cross over the red and upward momentum, blue line, I got a green candle with a flat bottom, and I got a PSAR. The PSAR is the dot, okay? So PSAR is the dot. Now, you want to understand the breakdown of what this means? I mean, this is the momentum. These candles translate the Japanese candles. This means parabolic stop and reversals. Last week, Dr. Brightwood on a Talk with the Finance Doctor, which is why you need to stay on this call, I promise you, you need to stay on this call. He broke this down, right? He broke this down after this call and helping you understand the significance and the importance of why the BYOB cash out works so well, right? He broke this down last week. So if you missed last week's Finance Doctor call, you definitely want to make sure you go back and listen to it after you stay on for tonight's call. So now, and it's on the YouTube channel. And so right here, you got the blue line cross over the red and downward momentum. And then you got the red candle with a flat top. And then you got the peace-off flip right here. So all of these line up. Now, why do I need time frame confluence? Because we all enter trades differently, right? We all want to make sure that we enter the trade. We all enter the trades differently, right? So you might enter the trade. We got something called pip reaction time, okay? Your pip reaction time. I might enter the trade right here. You might actually enter the trade. Let me not use a support and resistance line. Let's not do that. Let's do this. I might enter the trade right here. You might actually enter the trade up there. That's your pip reaction time, okay? So my pip reaction time, or that might, let's make that my pip reaction time. Let's make this one yours, okay? Haha, right? So my pip reaction time is 11, yours is 11 pips. Mine on the other hand, oh no, let's not make it 37. So this is GBP pair. So let's make it 24. So let's make it 27, right? So right here, let's make that pip reaction time. So that's pip, it wouldn't be that great. We hope it's not that much. So we're gonna make it a little tighter. But this is the reality. This is the reality of pip reaction time. How long did it take you to get in the trade? And honestly, because it's GBP and it moves that fast, it really could be that much. I mean, literally, it could be. So that's your pip reaction time for how long it takes you to get in the trade. We're looking for 10 pips. 10 pips. A cash out, 10 pips. And then you still got your broker spread. So if I was looking at another currency, which let's just AUD JPY, it won't be 30 something, right? This would literally be, right? That's 7 right there. So we know that if I'm looking for 10 pips, this is only going 7. So if I'm only looking for 10 pips, what is the chances of me getting and grasping 10 pips if it takes me 7 to 10 to 12 pips to get into the trade? So, and that's because you have some individuals that'll say 777 in the chat, 777 in the chat. And then you're wondering, how did they take profit? Because I'm still in the trade. It's your pip reaction time. So you want to understand that this is a part of why time frame confluence is so important. This is one of the reasons why it's so important, okay? Now, yes, the blue line, that blue line crossover the red should always happen. That blue line crossover the red and a downward momentum and that blue line crossover the red and an upward momentum, that should always happen. We got to have that crossover and cross up and that crossover and cross down. We always have to have that. Now I need to drop down to the 5 minute. My 5 minutes should still be selling or it should still be buying. Like in this case, I need to be buying. In this case, I need to be selling, right? The lower time frame happens before. That lower time frame happens prior. Like the lower time frame, you know, it happened already. So remember, the higher time frames is where the market's going. My lower time frames is where all the activity happens. So if you're a scalper, okay, if you're a scalper, you're literally just where the activity is transpiring. You're literally where the activity is happening. That's what you're doing. So it needs to still be selling because that's the activity happening. So that means that activity is happening before. There are more candles in the 5 minutes. So that's happening before, that's happening first. And then I want to come up here to the hour, okay? I want to come up here to the hour. And when I come up here to the hour, okay, this needs to look like, it needs to look like a trade I'm about to take. right? It needs to look like a trade I'm about to take. So the same way we sit and wait on a 15-minute chart for trades to set up, right? We wait for trades to set up. That's the same way we have to approach the hour. Do not overcomplicate it. Do not overthink it. Don't overcomplicate it. Don't overthink it. Because I cannot tell you how you understand how to sit and wait for a trade to set up on the 15. Like you're like, oh, I'm waiting on the PSAR. I'm waiting on the flat top. I'm waiting on the flat bottom. And then when I go look at the hour, I get, what am I looking for? What were you looking for on the 15? You're looking for the same thing. The only difference is I'm not waiting for it to set up. I don't have to wait for it to set up. That's the difference. I'm not waiting for the setup. I need it to look like it's about to set up. That's what I'm waiting for. I need it to look like it's about to set up. So I need to wait on it's about to set up. Well, I'm going somewhere else tonight. I can redirect them to that video. I'll redirect them to that video because I'm going somewhere else tonight. So now, but thanks for the suggestion. And we should be looking at the 1 hour. We should be looking at the 1 hour. And I don't want to spend too much time on that because I'm definitely going somewhere else tonight because of what the market's doing this week. So but that's a really good suggestion, but I'm really trying to get somewhere else tonight because of this being NFP week. So right here, we got an hour, right? And my hour is still selling, okay? That hour is still selling. But if you see that comment in the chat, the video, literally, there's a playlist that all these videos go in called BYOB Basics, right? And you can literally go, and I need to make sure BYOB Cash Out Basics. I need to go make sure, but I'll create, so because we're bringing Tuesdays back to the basics, and so that video is in that playlist. And I actually put it in Trading the BYOB Cash Out is one of the foundation videos. So it's definitely in there because someone asked me, could I put it in there? And so that's in there. So now what you see is this has to be in that cell. So it has to be in that cell. And this one is lining up. So you see we don't have a PSAR flip. We don't have a flat top candle, right? None of that is on there. None of that's there. And that's okay. Right? That's okay because it has to look like a trade we'll be taking in a while. It's not a setup. It's not, I don't need a stochastic, right? Blue line crossover the red candle with a flat top, piece or flip. But it looks like if I wait long enough, then I'll have a trade set up. So that's what this does look like. And remember, it's an art, not a science. Now this one, okay, this one. This one is beginning to look like it might shift, but we're not quite there yet. And GBP allows us to have an exception to the rule because of the amount of liquidity that they push into the market, right? So GBP gives us that liquidity, right? GBP gives us that push. So you see how the stochastic is beginning its curve? So what I can do is I can drop down to my 30. And I can see if it started moving yet. Well, it has not. So I have to be patient and I have to wait. So let's go to the next candle. And let's go check the hour. Actually, yeah, let's see. So now when I do that, because we were right there. And so now when I do that, you see that this one actually looks like this setting up. So my stochastic is beginning its curve. I got my, everything is there. So it's beginning. Now, what I can do, and remember, it's foundation we're building. So if you're straight new, you just started trading a fresh 111, 10 pips and cash out. You have a little experience under your belt, I can trade to my support and resistance lines. What does that mean for me? That means that I actually, because this is GBP, look at how many pips this rolled. Right? That's 70 pips because it's GBP. So I went from 10 pips to 70. Now you might have brought about 30 just because, I mean, not 30, 60, just because pip reaction time, right? Broker spread. So, but that's still more than 10. So you can trade to that support and resistance line, right? you definitely could trade, or wherever you marked it. You might have marked it here. If I marked it here, like if I would have marked it here, that's still 52, which is more than 10, right? It's more than 10. So that's the BYOB cash out. That's what that is. Now, how do we take this and apply it to what's happening using the tools? You notice that this morning, because of the market, I told you the market had no direction. This is not a tools training, but you know we come here and pull. So I'm not going to get too detailed in how to pull from here. There's a playlist on that. I just want to show you something, right? We've trained on this. So what I just want to show you, right? Because the market had no clear direction. This morning I showed you a trade that took 24 hours to get to take profit one. Okay, so what we did is we pulled some trades from the 15-minute chart, and I just want to show you something. I'm going to show you two of them, and I want to show you how you can take advantage of both of these, okay? AUD, actually. So you can take profit with more pips at the support and resistance line? Absolutely. 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 So on every call that I go over, every call when we do the strategy, every call, at the beginning of every call, you hear me say 10 pips and cash out, or take it to a support resistance line. You don't take it past, and now you have to understand the market a little bit with a little bit more depth to take it past the first one. Like, you have to understand the higher time frames. You have to understand, you know, taking it to like, you have to understand your hour, your 4 hour. You have to understand your trend. Like, you have to understand the market in more depth to take it past that first one. But you're gonna get to that first one. But you have to understand the support and resistance line. So if you understand that, then you'll get to that first one. Absolutely. Absolutely. So 71291. So, but yes, ask your questions. That's what tonight is for. So that was actually a good question. That's what tonight is for. I love it when you're like, wait, I'm leaving money on the table. Let me get all my money off the table. All right, so here, okay, 15-minute chart. So this is where this one hit all three take profits, right? We pull trades from everywhere, right? We'll have tools training. You know, I told you we're gonna cover everything in the academy, so there's more to come. So you can kind of see, if I look on the higher time frame, just so you can kind of understand, like, this had turned around and it was in an uptrend, okay? So you got to remember that, just kind of for some clarity and understanding, that if you're trading with the harmonic scanner, if you pull on the lower time frame, that the lower time frame is typically going to, you want it to be in a trend. Like, where are we at with this one? This one was coming out of a correction, right? You can see, that's why I left the arrow right here, where you can see this one pulled out of a correction. So the harmonic pattern that got identified is right here in this correction that happened right here, right? So that's the harmonic pattern that got identified. And so what happened is you actually were able to take profit 1, 2, and 3. And so that's what got identified. That's typical. So we'll do deeper tools training on that. But you notice that that's why when this morning I told you, if you're pulling on a 15-minute chart, they'll be hit or miss, because you don't want to take one where, you know, where you're taking, like, if it identifies a harmonic pattern or something and you're taking it down for the sale, like, let's say we had identified one for the sale. What if it is like, like, let's say, or like, for example, what if it would have been this buy, for, you know, this buy, let's just say this one. Let's say it had been a buy right here. That's a correction. Well, those are the ones that are a miss. So you can pull, you're not getting a 5 minute. So stay with me. So that's a miss. I want you to, I want to make sure you understand the market right now. If we have time, I'll go back over that. But I want you to understand the market right now. So those are like a miss. And so those won't hit. And so, but you can pull on any time frame. Like you're talking about on a vibrato, but just I can't pull anything on a vibrato right now. I'm actually in a storm right now. We got a real bad thunderstorm, lightning, and everything right now. So my internet, so it's not allowing me to pull it. So right now, you can actually see, you can see right here that this was pulled in that correction. And so this one's pulling up, but you have to understand where those are pulled. Because had this buy been pulled right here, right? Had this buy been pulled right here, then this one might not have been one that I wanted to set up on a 15-minute chart and take a look at. So this is something that's important, especially with what's happening in the market. So yes, a correction is a pullback. Yes, it is. So yes, it is. So you wanna kind of pay attention. It's like, so you want to pay attention to these things. And so when you see it, you see the blue line cross over the red and the upward momentum. And you got a green candle with a flat bottom and a PSAR flip. And you can see this one actually rolled out. Now, time frame confluence. So this one got ready. But when we did the confluence, right, this one actually had confluence. So this was a trade that you could have gotten into. Now, what was I just talking about? Being able to take my take profit, right? Being able to take my take profit. So right here on the 1 hour, I'm actually still in that buy. If I check my 4 hour is buying as well. So my 1 hour and my 4 hour are buying. So I know that I am good up until take profit 3, right? Well, let me say should be good, right? Technically, it's only 20 pips, 22 pips for the most part. So this is a shorter trade. So I know that I should be able to take this trade up to the 22 pips because I check my 4 hour and I check my 1 hour and my 4 hour. The 1 hour is the swing of the market, right? The 1 hour is the swing of the market. The 4 hour is the trend of the market. The 1 hour is the swing of the market. The 4 hour is the trend of the market. And you can see that even though this one is wicked out, that's fine. You're really looking to see what the market is doing overall. That 1 hour is the swing of the market. The 4 hour is the trend of the market. And you see that it pulled up. Okay, so let me mark up this other one. That's what I'm showing you. Now, it's not, okay, the take profits. I understand they're called take profits. They're called take profit 1, take profit 2, take profit 3. Understand, these are nothing more than support and resistance lines, okay? They are nothing more than support and resistance lines. Let me show you, okay? Pull my line chart, okay? They are nothing more, look at what they are. They are nothing more than support and resistance lines. So that does not mean you have the choice, right? That is correct. You have the choice. If you want to go up to the third one and take profit, if you just want to stop at the first one, the second one. That doesn't mean that it's 3 different take profits. That doesn't mean that doesn't mean I need 3 separate trades. That doesn't mean any of that, right? That doesn't mean any of that. It's just terminologies that we need to adjust our mindset around. Just like when we did the training and we talked about buy stop, sell stop, buy limit, sell limit, right? It's all in just understanding what it actually means. So it's not that I have to do, I'm in 1 trade and 2 trades and 3 trades. No, that's not what that means. It's just, these are nothing more than support and resistance lines. And so you can literally set a take profit up here and run a trailing stop loss, but this is only 20 pips. But if we're doing it on an hour, you can where is it, do you want to understand that? So, right? The swing of the market is the direction that the market is going. So the swing of the 4 hours a trend, like where's the trend? The hour is the swing of the market is direction that the market is going. So if I'm like, so this one, the swing of the market's in a buy. I mean, the trend of the market is in a buy. But right here, you notice that on the hour, you see all your pullbacks, your corrections, which is your pullbacks, you see all of that. So if I might, this candle, this might be in a sell. So that's the current swing. So you understand that if I'm scalping right here, okay, look at my 15. Let me put a, right? Let me put something right here. So like if I'm looking at this one right here, like I put the arrow on top of that candle right there, that's the current swing of the market. The current swing of the market is in a sell. It's swinging in a sell right there. And then I come down here to the 15. Look at that. That's the current swing of the market. But the trend of the market is in a buy. But their current swing of the market, this swing of the market right here is in the sell. So I know that because if I'm scalping, 10 pips and cash out is a scalp. 10 pips and cash out is a scalp. So I know I can grab 10 pips out of that. That's what the swing of the market is. So I can grab 10 pips out of this. That's what that means. So now let's look at this other one real quick. Let's mark this one up. One, 3, 8. I'm gonna give you the entry point on this one too. I think I'm gonna give you the entry point on this one. The foundation, absolutely. Everyone is focused on the 15-minute chart starting out. Absolutely. And that's for a few different reasons. It's easy to say I got my 10 pips and cashed out. And then I got my 10 pips and cashed out. And then after you got your 10 pips and cashed out, then also account balance, right? Also account balance, because what did I just do? I think I just wrote these numbers down wrong. So you got your account balance too. So if you're looking at starting trading, right? If I want to start trading and I want to start trading on a 4-hour or an hour chart, if you notice anything about trading, one, I started trading on an hour chart, that's got significant pullback, right? That's gonna have some significant pullback. Let me go check these numbers real quick. So that's gonna have significant pullback, right? That's what that's gonna have. So if I know for a fact that that's gonna have a lot of pullback and that's gonna have like the amount of pips and everything else that that's going to have, then one of the things I don't want to do is I don't want to put you in that type of trade as a beginner, right? I do not want to put you in that type of trade as a beginner. I want you to be able to get in the market, jump in and have some success, because you're not what you need to fund your account with to start trading from that level and that perspective. And I'll pull that up too in just a minute. I'll pull that up too. Give me a second. I'll make sure we get that pulled up. That's what I did. Hold on. So make sure I get my numbers in here right, because I feel like I'm not punching numbers in right or something. Definitely not punching numbers in right today. Okay, here we go. Goodness gracious. 138204. No, I don't use their numbers like that. I'm doing this for training purposes. You saw me just switch over to the vibrato. I mean to the harmonic scanner, right? I'm doing this for training purposes. Okay? I want to show you something. All right. I want to show you something. So now, as you look at this was where they determined an entry point. So remember, these are nothing more than support and resistance lines. I didn't even bother marking the last one, but I mean, for the sake of it, I mean, we can throw one on there, right? We can throw one on there, but I'm not even gonna bother with it. So the entry point is the BYOB cash out, but just for clarity, you don't enter the trade. We don't take nothing blindly. This is why you're the signal, and I cannot be clear about that. That's why we bring everything back here. You don't take anything blindly, okay? You don't take a trade blindly at all. Everything you do, you bring back to over here for the BYOB cash out. You know, everything you do, you bring it back over here. So you notice that. So we're gonna look at this one, okay? Right here. We had the blue line crossover in the upper momentum. I got a green candle with a flat bottom, and then I had a PSR flip, okay? So that gave me the go ahead. Now let me jump up to the hour. Do we got confluence? Like, do we got time frame confluence? You know you're supposed to check the hour. Are we supposed to check the hour? Right, so we got time frame confluence, okay? We definitely got it. So, as we're looking at this, we can find it back. Now, this candle, for some of you all, where we at on the 15-minute chart? Now, because you know how GBP is, let me go confirm it on the 30. You know, for some of you all, for that more comfort level, right? Because, right, GBP gives you that exception to the rule. So you can go confirm it on the 30. Now, you see how we got to take profit one. We got to take profit one, which is that first support line. So let's go check our hour in the grand scheme of things, and let's check our 4 hour. Our 4 hour, our 4 hour, the trend of the market, right? The trend of the market is in a sell. The trend of the market is in a sell. What did we just finish talking about? How do I know that I do not go past take profit one? How do I know that I do not go past take profit one? That I only go to the first support line, that I am not going past take profit one. And remember, these are nothing more than support and resistance lines, but how do I know that I do not go past take profit one? What did my 4 hour tell me? My 4 hour said, absolutely not. My 4 hour said, absolutely not. My 4 hour said, so my hour gave me the go ahead. My swing of the market is going to flip in a minute. I told you guys internet. My swing of the market said, yeah, come on, we got you. You can get to take profit one, swing of the market. My 4 hour, so my 4 hour said, absolutely not. There is absolutely no way. The trend of the market is not. The trend of the market is not in a buy. So there is no way you're getting past take profit one, which is a support and resistance line. Any questions or comments on that? Does that bring clarity to what we were just discussing? That should bring some clarity. That should really help you understand. Do I do take profit one or do I keep going? It depends on where you're going. Do you do trend? You always do time frame confluence. You don't ever trade without time frame confluence. You don't ever trade without time frame confluence. But how far are you trying to go? We were on the 15-minute. But if I'm just trying to do 10 pips and cash out or just get to that first support and resistance line, then I don't need anything else. But if like we took this trade on the, like we took this off the harmonic scanner, if you're trying to go past that first support line, right? If I'm trying to go past that first support line or first resistance line, whichever one you're looking at, then you definitely need to be with the trend. The trend is your friend. The trend is your friend. The trend is your friend. Exactly. Forget about it. The trend is your friend. No. The 10 pips and cash out, you still need time frame confluence. You still need time frame confluence. You still need time frame confluence. I got a question about time frame confluence. So time frame confluence, you guys want to see time frame confluence again. You still need time frame confluence. The trend is your friend. You're not going anywhere without that time frame confluence, right? I'm not going anywhere without time frame confluence. Okay? Not the 30 to 5. Not the 30 to 5. Let me do it again. Let me do it again. All right. So we're gonna come back over here. So looking right here. We're gonna start out right here. So I got the blue line cross over the red and an upward momentum right here. Blue line cross over the red and upward momentum. Okay. Blue line cross over the red and upward momentum. I got a green candle with a flat bottom. Okay. I got a PSAR flip to the bottom. Right there. That's it right there. That's the BYOB cash out. Now, this is what time frame confluence is. Let me delete these arrows over here so you guys don't look at these. This is what time frame confluence is. Actually, no. Let me not do that. But we're not going to start way back here. We're going to come over here and we're going to make sure we're on a 15-minute chart, right? No, that's not what I said. I didn't say you should only trade the first support and resistance line. That's not what I said. So blue line, hold on, I'll answer that in a minute. Blue line crossover in the upper momentum. I got a green candle with a flat bottom and I got a PSAR flip, right? I got a PSAR flip, right? So this is that right there. Now I'm on a 15-minute chart. Now I want to drop down to the 5. So this is where my time, so this is the strategy. This is the strategy right here. This is the strategy. Now I want to drop down to the 5-minute. This is where we do time frame confluence. This is where we do time frame confluence. Now with the confluence, this one has to happen first. And so this one has to happen first. So you see how it's still buying because I need it to be buying. So this is buying. Now, when I go to my hour, I need it to be buying. I already needed to be setting up like it's going to be buying. Well, it's not at this moment, right? I can look at this because remember, I wouldn't see any of this. So I wouldn't see any of this. What I can see is that now, because I hire, like I've been trading for a while, so I know that's coming out of a correction. But I'm following the rules to a T, right? Following the rules, this is not confluence. I got a red candle. I'm looking for a green candle. You see, I got an arrow right there in the upward. I need a green candle. We're going to go back down to the 15. Okay. We got 15 minutes. So you see how this happened? It says at the bottom that's highlighted, it say 1345. I really don't care about the first number, right? I'm at 45. In every hour candle, there are 4 15-minute candles. So that means 15 minutes to the next candle. So I'm just gonna move this over to the next candle. That means it's at the next hour candle. So I had to wait 15 minutes. Go to the hour. Guess what? Now I know I'm up. I'm moving up. Like I'm in that hour. So that tells me, look at that. I got that green candle. I'm looking for setup. This one actually has everything, right? It's a continuation. This one actually has everything. So what does that mean? That means that I can do my 10 pips, and you do this based on your skill set. Based on your skill set. I can do my 10 pips and cash out. Or I can, now based on your skill set, or I can trade to the support and resistance line. My trade will end at the support and resistance line. I'm not worried about it being on at the 20 on the hour. I'm looking for a setup. I'm looking for a setup. It doesn't have to be at the 20 on the hour. I'm not trading on the hour. I'm trading on the 15. Where is it at on the 15? Where is it at on the time frame that I'm trading on? Don't add rules. Don't add rules. Don't add rules. This is what that means when we say understand and not memorize. Right? This is what it means by understand and not memorize. So that hour has to look like. Now, just so you understand, because each one is going to be different. This is an art and not a science. Each one will be different. Now, what is happening on the hour? Impulse, correction, continuation, correction, continuation, right? So if you're going through the academy, what are we learning about this right here? So just for clarity and understanding, right? What is happening right here? We're in an uptrend. We're in an uptrend. So yes, absolutely. It definitely, don't talk about my trend line. I'm just trying to help you understand. We got a few minutes. So we definitely are just strictly in an uptrend. And you see that. Impulse, correction, continuation, correction, continuation. So this correction where all you did for understanding and clarity purposes is this is what you call price action trading. And so BYOB cash out got some price action with a twist action going on right here. So where do you enter a trade? Where do you enter a trade at? I'm glad that I like light bulbs. I like light bulbs. I'm always paused for a light bulb. So you understand it better. I love that. Where do you enter a trade? This is in the academy. At the pullback, right? You enter a trade at the pullback. You enter, this is actually in, this is textbook academy. You enter the trade at the pullback. So what did you just do? You entered the trade right here. The BYOB cash out put you in the trade right here. That's what it did. Textbook. It put you in the trade right here. That's what it did. So you entered, so you don't get in the trade right here. You don't get in the trade in the middle of an impulse. So you, at the pullback, at the correction, impulse, correction, continuation, correction, you enter the trade right here. And then you continue with the trend. That's how you trade, right? On the trend. So what did the BYOB cash out do? That's where it put you in a trade, right here. So I just put a trend line on there to help you see it. So that's all you just did. And then you took a trade up to the trend line. I mean, to the support and resistance line. That's what you took a trade up to. And if you understand, as your skill set develops, right? As your skill set develops, I can actually go to take profit 2, 3, and 4. So what are we really doing? We're trading with the trend. So we're trading with the trend. That's what we're doing, because now my skill set, I'm on the 4 hour. You see, it's on the 4 hour. So as my skill set develops, I'm trading with the trend. So where's your skill set? Where's your skill set? Absolutely, it's recorded. Where's your skill set? So you can, whether you just learning how to trade, 10 pips and cash out. And as you develop through your, And then you just come over here and you use the tools. You use the tools to help you identify, right? And if these tools will let me be great tonight, the weather won't, here we go. And you can even unclick these and pull from the higher time frames if you want to, right? Just, they'll help you be great. But this is how you understand. This is how you understand. And so, and when the market's doing what it's doing today, you still, thank you guys, you still, right? You still can just literally pull in there. How do you place the support lines? All these tools. I get in there, get in here, play with these tools. The same way, get in here and play with these tools. Get in there and play with them tools. This is where I'm getting better at trading with the trend. This is good skill set that will pay me forever. Absolutely. I played with the harmonics last night and took a long trade and worked out profit. Continue to trade each support and resistance line as long as the trend remains. Continue to trade each support and resistance line as long as the trend remains the same. The support and resistance lines won't change, right? I want you to understand that. I want you to understand that. The support and resistance lines will not, they don't change. So the support and resistance lines will never change. So the market fills them in as they move. Like, or the only thing I can tell you is like how gold just like set new records right now. But you see how they're creating support and resistance lines as it goes though, right? It just made a new one around 2005. And then it kind of went and pushed and it kept going, right? Because those are actually dollars. So, and we're about to end this call, so let me see. This is good. I don't feel so lost. Thank you. You are so welcome. No, you do not. Keep plugging in. I promise. As you go through the academy, I promise you, that's why it's set up the way it is. Go through the academy and keep plugging in. Go through the academy and keep plugging in. And it's just get clearer and clearer and clearer. It's gonna be clear, 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 clear. And the market is just gonna start talking to you, talking to you, talking to you. It will be talking to you. So you're gonna be like, it's light bulb just gonna start popping off. So it'll just start talking to you. So you're excellent. Thank you guys so much. You guys are wonderful. So, and thank you so much. Thank you guys. So, but we definitely gotta transition. So just let me see. No, what I did is I pulled from the scanner tonight to show you, but I typically draw mine on the hour. But the harmonic scanner, these are still these are actually, because I was training, I mean, we were talking about it, but these are support and resistance lines, but these are actually Fibonacci retracement ones. So, but they're still support and resistance lines. That's what they use. So I'm grateful for you all too. And it's BYOB Challenge. If you look BYOB Challenge, that is a YouTube channel. But I love you guys. I love you guys. I love you guys. I promise I do. I love you guys. I love you guys. I love you guys. But don't go anywhere, right? Don't go anywhere. Because don't go anywhere.